Good morning, everybody. We're going to do our CoT report here from the data that came out on Monday. It was delayed with the holiday last week. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We'll start off with the SPX. Commercials added to their shorts last week, and as we head into July, especially towards the end of July, there are a lot of catalysts and macro events to keep in mind. We have earnings season starting, and then at the end of the month on the 30th and 31st, we have the FOMC and our potential first rate cut, which isn't always a bullish signal. Then in the months ahead, we have the election, and any change in policies will filter through markets and repositioning that is occurring. Commercials and non-commercials are on the same side of the market at the moment. And commercials are building their largest short position since the correction in April and a little over 25% of the way towards their 3-year maximum that we saw in 2022, if you all remember that. We also have seen a big drop in open interest that we want to watch into the next couple of reports to see if people are deploying more capital or if they're choosing to go to the sidelines. Last week, we came right up to our upper target at 56.19, closing the week out right near the highs there. And for the week ahead, if we get over 56.32, our targets will be 56.75 and 57.01. Under 56.32, we'll look to come back down to 55.96 and 55.63. And if we get a hot CPI print, likely coming down much lower to the 55.10, 55.15 area. CPI and PPI Friday are more likely to trigger our bigger moves on those days.
Bitcoin. Commercials added to their long position as if they were still buying the dip, similar to what we saw in late January after the ETF announcement, but the position is still not large enough to give us a signal. So we just wait and watch in the crypto world.
And on to gold, we're still more of the same in gold and commodities. Still basic same range since June, and our levels will be the same for the week ahead. 23.59 will bring us back down to 23.11, and holding over that, we'll look for 24.20, and under 23.11, we'll look for 22.58. So our levels, you can see, did not change week over week here. Into the yen, another new 3-year high for commercials as they try to stabilize the market. We have the same key levels as last week before. We will look to trigger any position. So that would be the spot 00634 before we would even consider our longs. And we'll likely begin to see more explosive moves if we get back over spot 00644. So this is giving signals given the positioning and the highest open interest in multiple years. But again, we have to wait and watch now for our trigger on this setup. That is all for this week, guys. I hope you all have a great week trading, and we will be back again with a new report this weekend when the data comes out on Friday. Check us out at stixtrading.com or on X at Stix Academy. Have a great day.